I absolutely hear that you can have trading ranges for things even if the fundamental story is getting better. But you know, I'm interested because, you know, I read earlier on in the year, as I'm sure you did, I'm sure you talked about all the kind of doom and gloom coming out of the investment bank saying the oil price is going to $10 and all this kind of stuff. And you know, we were hovering a little bit.
Same ones who when we were 110, so we're going 150.
Yeah, I mean, well, that's exactly right, isn't it? And the thing about when you're late to the analyst party, you just have to come with, you know, an even more spectacular and ultimately wrong prediction. And all we've seen since then is a recovery from the late 20s up to, you know, up towards 40. And you know, I think there's pretty good arguments why we won't go back to 80, we won't go back to 100 in the short term, but it strikes me that there is something of a recovery going on here. And certainly a lot of the people who I read and whose opinions I value, they're making bets in the commodity markets and they're making good money. They're making better money on those commodity plays, potentially because of leverage, than they have been doing in equities in the last 6 weeks.
And I think that's the point about the oil market compared with a lot of markets at the moment. This is a general comment. The oil market will give you a chance, and whether you look, and I've had a look at the ETFs a few times. I mean, obviously, I'm not allowed to trade individual stocks, and that kind of. But actually, the oil market gives you a chance because there's a lot of liquidity. You get some decent trading range, some good movements as well. So I totally understand why people want to trade the oils rather than a hell of a lot of other products as well. The ranges are extraordinary, and obviously you can take a horrible haircut as well, but it's giving you a chance. There's liquidity in the market, and people are craving liquidity at the moment.
If you just think about the percent move from 30 to 50 on oil, I mean, that's a great trade. So that's what a lot of people are doing. But is it really an investment move? I think over the longer term, people are going to move back into equity.
Assuming you're on the right side of this trade, because I'm just looking at a couple of charts, Tullow Oil and Glencore, trying to do a comparison about what you see, and what's flagging up in both is that if you get a turn, you get an aggressive move and a short, sharp period of time. That's not the sort of place where people want to be hiding out when you're talking about pension funds, for instance.
Well, yeah, I mean, I mentioned this earlier regarding the market in general, is that you're going to get these short covering moves, and I think that's a lot of what's going on with commodities. It's not really, you're not getting that kind of longer term in commitment of new money coming into commodities.
Do you think this is a dollar negative trade that's happening that we're seeing this week? You know, people got into it because the dollar was lower, and people thought maybe lower for longer if we're not going to see too many rate hikes this year, and then suddenly you've got all these so-called hawks coming up from the Fed talking about more rate hikes and whether April could be a live meeting. The dollar's gone up and now commodities have gone south.
Well, yeah, I think that's the kind of environment we're in, is that when you're in these trading ranges, when you don't, for example, in the currency market, you don't really have a real decisive real interest rate differential to support any given currency. So what happens, you tend to get this sort of compressed environment of interest rates that means you're going to be more driven by sentiment. So what's going to happen is currencies are going to go from one sentiment extreme to the other, in tandem with commodities going from one sentiment extreme to the other. In fact, that's what happened. Our indicators have shown the dollar got extremely pessimistic, gold got extremely optimistic, commodities got extremely optimistic. And what we want to look at is when we start to see that sentiment turn, that's often a sign that the trading range is starting to go in the other direction. And that's what's happened here with the dollar.